Good morning, everybody. Good evening, good night, wherever you may be. I hope everyone's doing wonderfully well as we get started here on this wonderful Wednesday morning, my time. It's always a pleasure to be with you guys, and this is what it's all about: getting pumped for the market, getting focused for the market, getting ready to trade and make money in the market. I don't care what you're trading. You could be trading crypto, you could be trading stocks, you could be trading commodities. Heck, you could be like me and trade all of them. And the bottom line is we're here to make money. And that's what I'm going to do my best to help you do. Before we get started, check out this VI hat, or this verified trader hat we got made up a while back. I'm looking to get more of these and maybe send them out to you guys. So we'll look into that. Maybe if we do something where, again, you're a VIC member or an In the Money Stocks Verified Investing Alert member, we can get you guys these. But this is some good swag that we have here. Verified trader hats. We got verified traders, everything. So that's what I want. I want you guys on point. I want you guys learning the charts. I want you guys focused on the realities of the market, not the hype that you're going to get caught on Twitter with, or Instagram, or any of these other messed up kind of genres and avenues. But I want you guys focused in. So what we're going to do today, number one, let me have a drink of my juice that I juiced today. By the way, we got some carrot in here. We got some, by the way, it's a reusing the Starbucks cup, trying to be healthy or good for Mother Earth here. But bottom line, we got carrots and cucumber and celery in here, organic apple, a few little odds and ends, just getting my mind right, because obviously it's all about focusing in and being able to see things clearly. So be healthy. That's another great little tip from me to you. All right, so let's get into some action here. We have a Wednesday. Now, this is a weird week because we don't have a lot of price action due to economic news. There is a little bit here and there, but we're not talking big inflationary numbers. We're also not talking about Federal Reserve commentary or decisions. So it's a little bit of what I would refer to as a hangover week. A hangover week means that basically you're in a situation where there's a lot of action the previous week, and everyone is basically, they were drunk on action, right? I mean, it's essentially, that's the kind of analogy, where this week we're like, okay, there's not a lot of action. And what you can see is, you can see the price action. It's slower. This week, the bank stocks aren't going crazy. The volume on the S&P is quiet. Even crypto, I mean, a little bit of a pop today, which we're going to talk about in just 1 second, but even crypto's been a little bit quiet for the last few days or so. So again, that's what we call a hangover week, when people are kind of calm and a little bit less agitated. All right, so bottom line is here, let's go into some charts. I want to start with the crypto charts because I know everyone's waiting for those. We want to look at that. It's actually one of the few things out there that's moving big today. So what I'm going to do is I'm going to flip us into the crypto chart. This is the Bitcoin chart. We are having a nice pop on Bitcoin today. Bitcoin trading up about 4.4% on the morning session, almost $1,200 from this time yesterday. Now, one thing to note here, take a look. Basically, what we're looking at is a level of support right here, right? So this is very defined, and this is the beauty of charts. It kind of guides you to support and resistance. Notice how the lows right through here are all together at this 26,700 level. That's a very obvious support level. Notice how the highs right here are all at the 28,700 level. That's resistance. Look at the high of today. It was close to 28,700 on Bitcoin. So what this is telling me, and number one, where do I get that resistance from, by the way, because this is just cool stuff. But look at this low pivot here from the bull market dip in 2021. It is exactly at that price point, 28,700. So essentially what we're looking at here is that becomes resistance. That's why price is having so much trouble getting through this level. All right. So again, that is your level to watch. Now, again, what we're doing here is we're playing pinball. All right, meaning you're bouncing here, you're hitting off here, you're pulling back, you're going back and forth. And essentially what that tells us is that the more we hit one way, the weaker it becomes. So the more we hit to the upside, there is a chance that we could break up. I've said that for a while. I said, listen, there's a chance we could break above this 28,700 level. The problem is upside is limited to about 30,000 to 30,500. Again, that takes us back to this major consolidation area right here, as well as all of this over here. Even pre-bull market run up to 60,000, where we then pulled back, or 65, then we went to 69 and pulled back. That's that area right in there. All right, so again, the way I'm viewing this, the way I'm trading this, I have a tiny position short Bitcoin at 28,450. I will be adding to that at 30,000 Pierce, essentially. that puts me in a position to be short close to the 30,000 level. If we get above 30,000 and we stay there for a certain amount of time, like a time count, then I cover my short. All right. So this is a very calculated trade with a specific risk to the trade. Right. And that's what it's all about, folks, is that in general, we want to know what's our end game. When does our thesis fail? And that's what we're doing in this chart. That's how I'm analyzing this chart. All right, next up, let's take a look at Ethereum. Now, Ethereum is kind of interesting here because you're in this upsloping channel, and it's a great upsloping channel. You connect these lows, that's exactly where we hit right over here. You go from these highs, and it goes right on that same incline. Notice the blue lines are parallel. All right, so what this tells us is this is a lot of resistance right here around this 1850 level. All right, if 1850 does break, and if we get above here, there's a run up to 2000. Now, why is 2000 very key? All right, the reason 2000 is key on Ethereum is because it was the highest point right here since the lowest point was put in on Ethereum back in June of 2022. So again, the lowest point was put in June of 2022. The highest point since then was in August of 2022. That's again the upside potential. That's where Ethereum will meet resistance. Would I be a shorter there? I would. The reason I would be a shorter there is because I'm the type of trader that makes a level break. Otherwise, if it doesn't break and it's resistance, then the probabilities are dictating a pullback. So it's all about probabilities. There's no, oh, I'm always bearish. There's no, oh, I'm always bullish. There's none of that BS in this chart or in any charts that I look at. It's about specific levels. And as soon as you understand that, you become free. You become free to understand that, again, it's all about the odds. You become the casino. You are no longer the gambler. And that's what it is. It doesn't mean I win on every trade. Heck, I put out a video yesterday. I lost 99% on SBNY because the Fed halted it. The government halted that stock. I was in that stock at the time. And it basically opened yesterday at I think I sold it at 58 cents. So again, I lost 99% of that trade. I'm not perfect. No one is. But the key is, how much did I have invested in that trade? 1% of my portfolio. If you had $100,000 yesterday, you would have had 99,000. In addition, we closed out an Alibaba trade, 3.6% of our portfolio. Boom, we made back almost 50% of that loss right there. So it's all about position sizing. For those of you that are new out there and you guys are focused in and thinking to yourself, oh, okay, think about this, right? I have to make $1 million overnight, or I have to make it by the end of this year. That's the mentality that will make you go broke. Always remember that, guys. It's singles and doubles. You want to get to the Hall of Fame as an investor hitting singles and doubles. You know why? Because ultimately to hit home runs means you're going to strike out. And when you strike out in trading, that means you lose a big amount of money. And that is unacceptable. That kills your account. It basically puts you back to the starting point, and it is not good for your overall health and your financial wealth. All right, so let's get back into the charts here. I want to go over some other charts. Let's take a look at gold. Gold today is pulling back just a little bit. And by the way, I do have some trades coming up I'm going to give you guys, so stay tuned for that. Don't forget to like this stream, share this stream. I want literally every time I log in and do these lives, I want 100,000 people watching live and another 900,000 watching afterwards. So I need your help. Share it, give it to your friends and family, help them benefit from the keywords and the key analysis that I do. All right, so let's take a look right here at gold. Gold's pulling back. Now, gold's had a great run. There's nothing to take away from gold here. You guys know I continue to be a huge bull on gold. But we are short-term extended here. We might need to consolidate a little bit more. After consolidation, is gold going higher? Absolutely. You're looking at a double top coming up. That's your next target at 2075. So essentially what I would say to you, or what I'm saying to myself, is that I am buying pullbacks. If we get a pullback in gold, I'm a buyer of gold. The chart is an amazing bullish. Look at this sideways bullish consolidation for the last 2+ years, the last 3 years. That is amazing. Last year in 2022, everyone was like, oh, gold is coming down here. It's not performing like Gareth said. By the way, it still beat the S&P and Bitcoin by a mile. But the key was, look at the dollar. The dollar was up 20%. 20% on the dollar, and gold was down for the year maybe 5%. That tells you huge accumulation. In fact, I did interviews where I said, guys, when the dollar is up 20% and gold doesn't decline by 20%, it tells you big money is buying. Don't be a fool. Follow the big money. There's a reason why big money is big money. It's because they know what the heck they're doing. And so ultimately, that's the key. And now we see this big move up this year. Look for it to attack 2075. My target for the end of this year is well north of 2075. Should be, again, potentially $2,300. Once we break out above 2075, that's your play. Look to buy miners on pullbacks. The miners will do really well this year because inflation is coming down. Last year, inflation was 9%. And you know what sucked for the miners? The fact that we saw inflation high and gold price was not going up. So they were basically making the same or less on selling their gold that they were mining, but all their costs were up precipitously. That was a bad recipe. That's why the miners underperformed. Take a look at the GDX here. Okay, this year it's going to be different. Gold price is going to go up quite a bit. On the other side of the coin, inflation is coming down. That means the miners are likely going to be outperforming. If we look at this chart of the GDX, which is the ETF for gold, take a look at this downsloping trend line right here. That's your line. That's going to be your next resistance at $39 and change. Once we get up there, expect a pullback and then look for a breakout to the upside. All right, let's go on to some other charts. Lululemon is having a rocket ship day today. Take a look at this. This stock, again, is trading sky high this morning on the back of earnings. Last I checked, around 370. I do have a level for us to watch in terms of resistance. So let's talk about where I could be day trading on the short side this stock today. All right, so 370s all the way up here, right? So again, 370. So you're basically right in this mix. You have a gap fill right here. If you're aggressive, you can look to short 386. 386 is going to be my first level to potentially pull the trigger on a pullback for today. If it gets there, in addition, if it continues up, then your big level is going to be 410. But this is your one that's most likely to hit today. And again, we're trading already too close to the gap fill, so I'm not going to play the gap fill. Therefore, this next level at 386, 387 is the opportunity on that one. All right, let's keep going on, guys. I have a big chart on oil here. Look at this chart on oil. Looks like a bunch of jumbled action, right? Well, let's make some sense out of this jumbled action. Okay, so number one, why did oil bottom where it did? Let's look at the chart. Well, look at this. If I put a trend line through here, look at that. Okay, pivot highs, pivot area, pivot low, pivot low. Look at where oil bottomed right there. Now, you might say, okay, well, it's bouncing now. Is it a long? No, you already missed the long. If you didn't go long off of that level, you're late to the punch. Don't be someone who chases. Chasing is the cardinal sin. I literally would put you in jail if I could, if I saw you chasing. The people that chase out there, think about people buying at 60, 65, 69,000 on Bitcoin. Ludicrous. Save your money, donate it to charity, do whatever. Get disciplined and make sure you buy technical levels. You buy when it's low. Think about this. All right, I got to just speak to this point here. Let's just go to a close-up here so that you guys can really get involved here. When I go to the mall or when I go to the store, am I like, oh, look at that. Milk's price this month is up 20%. Let me buy 10 gallons of milk because it's up 20%. Heck no. What do? I say, you know what? I'll buy a gallon. My family drinks a little bit of milk. I'll wait till next month or next week when price comes down. All right, you don't buy more of it. You don't rush in. You don't go panic buy milk. Or what about those pair of jeans, right? What about the pair of jeans that last week were $100? This week they're $500. Are you going to really go out and be like, hey, and now I got to buy those $500 pair of jeans? No, yet for some reason in investing and trading, this is what people do. They literally say, wow, the price is going up. I got to go in and pay more for it. That mentality is a broken mentality. As soon as we can fix our minds, get our minds right, that's where we can actually focus in and make money in the market. So you buy on sale prices. Technical support right here, that's where you're buying. Now, where is this going to be a short? Where do I think that oil could pull back, folks? I'm going to show you right now. Take a line here. Let me go to my chart. Bring up my chart here. Take a line, stretch it underneath these lows, which, by the way, this was a breakdown, right? Look at that. Hit, and broke. So you know where this is going to be a great level to pull the trigger on a short level. And by the way, I'm looking for a key circle here. There we go. It's going to be right here, right at that level right there. That's your shortable level. Okay. So that is your level. If you want to short oil, you're looking at $75.50, give or take. That would be a short. That would be what I would call a retrace to the scene of the crime. What's a retrace to the scene of the crime? Let's talk about it here. All right. In this situation, you had a line that was going up, down, down. And notice how it keeps hitting on this trend line, bouncing. And then all of a sudden we broke. What was the scene of the crime? Where did the crime occur? Where did the breakdown occur? Right there. That means this level here, that is your scene of the crime. That's going to be major resistance right there. All right. So again, this is super, super important stuff to understand. Please understand it. Now we got to look at natural gas, guys, because nat gas is dropping again. All right. Now over here, remember a month ago or so, we were long nat gas. I was doing streams talking about it. Then I said it would rally. There was our rally. We unloaded our Boyle position for about a 7.5% gain on that. Now it's coming back in. I started to accumulate again. You're into a double bottom and you have this down-sloping trend line here, down-sloping trend line that's looking very, very interesting on nat gas. So again, don't buy all at once. If you're going to do this, you want to use proper money management. Go a little in, dip your toe in the water. That's what I'm doing. Dip a toe in, dip a toe in, dip a toe in, and then slowly accumulate. People that go all in, they leave themselves handcuffed, right? You can't have no opportunity to do anything else when you go all in. By going in small, it gives you maneuverability. Investing is all about maneuverability. I'm going to tell you this. My win rate before I started doing, kind of inching into trades was probably about 60 to 70%. When I started inching into trades and accumulating, my win rate went north of 80%. All right, north of 80% is humongous when it comes to investing. I mean, think about that. Think about you are able to make money every 8 out of 10 times even. It's incredible. All right, so that's where we are. Looking at this market here, I have a couple other things to go over. We want to look at NVIDIA. I know a bunch of you guys are asking about NVIDIA. NVIDIA, to me, is one of the best potential short trades out there. As much hype as there, you guys know me. Do I get caught up in hype? Do I get caught up in the nonsense that's being spewed out there? AI and all this sexy stuff? Hell no. What I like to do here, guys, is I look at charts. And the charts have shown me that we have major resistance up around 275. Not only that, we got a topping tail here. And look at this trend line going back over here. So NVIDIA's up today. Okay, fine. It's allowed to bounce. We allow, the charts are allowed to bounce on occasion. We just had 3 down days in a row on NVIDIA. Okay, let it bounce. S&P's up a little bit today. But the key is that this area to me, 275, 280, sell it short until proven otherwise. That's my motto, until proven otherwise. Even if it goes above 280, look at this. 285, another resistance. I mean, there are so many resistance points up here in NVIDIA. The stock's up 150%, 175% or so off of the lows here. This is what it's all about, looking for these charts. Yeah, Alibaba, that was one of the trades I had yesterday. We unloaded it. It was a great big pop. I saw it is trading down today. What I'm going to look for, I'm going to be a rebuyer of Alibaba if it retraces down to this area right here. Right around 87, guys. So any pullback to 87, notice the support right there. I'm rebuying on Alibaba. Okay. Tesla, let's look at Tesla real quick. Tesla is in a wedge pattern. Which way will it break? I honestly don't know yet. If it breaks to the upside, where would I short Tesla? This down sloping trend line. Look at that beautiful trend line sloping down on the charts. That is a thing of beauty right there. So we're looking at around 245, 250 area, somewhere in that vicinity. That's only if it breaks out. That would be where I would look to short. If it breaks down, you have to be careful. You don't want to chase, but if it breaks down and kind of consolidates, you go short for a bigger drop back to 143, eventually back to $100. I think that's where it's going. All right, let's finalize on the S&P 500 here, guys. We got to look at the S&P here. The S&P 500, if we look at this chart here, in fact, let's go to the spiders. That's the one I have annotated a little bit more. This is what we're looking at on the S&P. Down sloping trend line. Let's see if we break above it today. If we break above it, S&P has short-term upside to the 413 level. All right, 413 level is this high pivot to this high pivot. That would be significant resistance. What would drive the S&P to the upside? Frankly, probably the banks. The banks have been beaten down so much that if that ended up, if the banks really caught a bid, if the regionals caught a bid, then I think you see the S&P trade up. Okay, so again, that would be a reason why maybe we break up to that level. On the other hand, if we break to the downside, you have this upsloping line and then this support here. If we ever get below this 375, watch out. We're going to retest the October 22 lows. Now, let's be clear on this, guys. I'm going to be extra super clear here. The markets are going to go lower. The Fed has now told us they're keeping interest rates up for longer. All right, meaning into 2024, we're going to see interest rates here. The market doesn't believe them. That's why valuations in stocks are still ludicrous. At some point, we are going to go into a recession because of high interest rates. At that point, valuations, remember, when we go into a recession, people feel the crunch. They don't spend as much money. They don't travel as much. They don't buy as much. So that means that earnings per share for most of the stocks out there will drop. That means valuations will drop. Ultimately, I have it priced in that the S&P 500 is going to have to come all the way down here, all the way down to this level here, okay? And then potentially down to this next one here this year. I think we could touch 300 on the SPY this year, which would be around 3,000 on the S&P. On the S&P. So just be aware of that. Bounces are great, but I'm going to continue to look to short rallies into resistance. This is still a bear market. It hasn't proven otherwise yet. I wait for the charts to tell me. I don't tell the charts, and right now the charts still say bear market, both in crypto, unfortunately, until we stay above 30,000. But right now, especially in stocks, it's a bear market. I love you guys. Thank you guys for coming out today. It is always a pleasure to keep you informed. I'm going to bring the alpha every freaking time I do these things. Eventually, they're going to be daily. We're going to be going into day trades, swing trades, crypto, stocks, commodities, all of it. Thank you all. Spread the news. Don't forget, guys, check out. I want you guys checking out here. Check this out. My YouTube. Follow me on YouTube. Here's Verified Investing Crypto. Go check it out. The Winning Trader series, my trading series. Check that out. And of course, InTheMoneyStocks.com, where I put out my stock trades. Go check it out, guys. As always, I thank you for coming out. You guys rock. And thank you again for tuning in. Take care.